All right, today is Friday and it is the 4th of January 2018, and this is an adventure in oil futures trading. And it was a good day, very good day when kind of everything came together, and even on a Friday too. Today was oil inventories, and I ended up finishing all of my trading before inventory numbers. And not to say that that was intentional by any means. I just took the opportunities as they came. And I did watch for a little while. And, there's some people that believe that the volatility is where the best opportunities lie. And then some people say it's too crazy and you can't trade that crazy volatility. And I kind of fall somewhere in the middle, but I would say I'm not skilled enough, especially when things are moving so fast, that even if I do spot an opportunity, I'm able to execute on it fast enough. So for the most part, then you're just taking momentum plays and breakouts and things like that. There were a couple opportunities as to where that I was kind of watching, and the way my style kind of trades based on liquidity and where large size comes in. I did see some things that were possible. The thing with me as well is that I don't really swing trade, so my trades are very tightly managed, generally with stops less than 10 ticks. So it just doesn't afford my style to do very well in those, because just these tiny fluctuations in price can rip you out. And unless you're just so completely precise on what you're doing, it just makes it pretty difficult. So I guess I would have to say this is probably my best day yet ever, and so that feels good. After yesterday, I wouldn't say that it really rattled or shook my confidence at all, because even though I had a day that I believe I was down 29, I feel like I traded well. I executed decently. I just had some problems with my trade management, and I reflected on that a lot yesterday and thought about what I need to do to adjust. And one of the things that I decided is that I need to execute on what I see, and I need to always have my expectations, because that is also how I manage my trade as far as where price is likely to go. So for me, there's a very fine line between riding that line between an expectation of what may happen, which is not real, it hasn't happened yet, and making trade decisions based on executing on what you see. So it is a fine line, because one, you have to ride and live kind of in both worlds, I think. I guess, there are certain price action traders that just manage the trades and their targets based on what they see on how price moves. But I think it helps me to have these likely targets, and I'll get into that. And it's early in the day still. It is only about, I don't know why my computer doesn't say what time it is, but I don't know. It's 11 a.m. So I'm done, and I've been done. You can see on my trade manager, my last trade was at 8:20. So, and hypothetically speaking, if I make 86 ticks on my eventual size, my short-term goal is to do this on 10 lots at least. So that's $8,600. Even on one lot, $860, that's not too bad of a day, especially only working less than 2 hours. So that's what I try to keep in mind. And another thing that I realized yesterday, there's another psychological game that you kind of play with yourself excuse me, when you're on demo. And that's the game of demo, and just trying to play a game. It's almost like a video game, and trying to get as many ticks as you can, but then you lose perspective on what's really important, and understanding that on the big picture, if you have a strategy and expectancy that will scale to size, and you can pull 10 ticks out of the market, that can be 10 grand. It can be 1,000, it can be 100, and something back in my affiliate marketing days is an old mentor told me is that just focus on making that first dollar. Don't worry about 1,000,000 and 10,000 and all those other crazy numbers, because if you can focus and you can make $1, you can make 100. And if you can make 100, you can make 1,000. If you can make 1,000, you can make 1,000,000. And then depending on what your goals and your aspirations are, the sky's the limit. And that's what I love about being an entrepreneur and let's call it, so I guess this is just more of just being self-employed. Because once you get a taste of that and once you see the potential of what that's like, it's very difficult to ever go back and work for somebody else again, or at least work for somebody else where you're just collecting a paycheck. Emotionally, it's been very hard for me recently because I've doubted myself a lot. I feel like I've been just getting kicked for the last 3 years and just losing and failing at everything I've tried, every business opportunity I've had, or just every deal that I've tried to work on, or every venture just hasn't come together. And that's a hard thing to stomach sometimes as an entrepreneur, but it's part of the game. And the only difference between the people that succeed and the ones that don't are the ones that quit. And everybody that has their own business or that starts a company fails. You have to fail. There's no straight to success door or step. It doesn't work because you have to test things and you have to try things and they don't work. And the only way that you can improve and get better is you accept the fact that those are nothing more than just failed experiments. They're not failures. And I don't have that figured out. Even after all my experience and so many different things, I still take it very personally. And I take it as something that I identify with as a man sometimes, these failures. And those failures, they hit you hard in the ego. And what I love about trading as well is it helps me pull back and distance myself from my ego more and more all the time. And I understand that I'm not my last trade and I'm not my last day or my last week. But it's an interesting process. Anyway, let's get into what I actually was looking at. And I'm not going to look at Bookmap too much. Bookmap it's just really is a great tool for me. And if you can ride the line of not overutilizing it and over trading using Bookmap, it is just a phenomenal tool because you can see things on this order flow that you cannot see very well unless you're looking at it such a tiny, even like a 2-tick Rinko, you can see things that you can't see there. Like for example, these smackdowns, these sharp, and this is what I believe these kind of things are large players in the market flushing the book and just hitting that bid and just smacking this down for stops. And this is an actual trade I took. And as you see, a lot of people, this is what we want to get. Okay, those breakout traders that are thinking this consolidation is not going to hold and we're going to go short. Unfortunately for them, that didn't work out very well, and this is when they get trapped. After this large volume either stops or if you're the further accumulation, this is where I'm getting long. And I took this trade. I'll get it. I'm gonna try to stay in order. I want to go through these trades because I had some really good ones today, and I do want to go through them. So I'll get back into this one. But Bookmap really is an awesome tool. And I went back and forth. I bought this way back probably 2 years ago, and a mentor of mine was using it, and it seemed like he didn't really find a great edge in it, and I think he stopped using it really for the most part. And what we were using it for at the time was to define what we call trading levels. And levels are interest of large, always large players. So this would be marked as a key level because at this level, large business transacted. Buyers came in here, stops were hit, whatever. So this is crucial. That's a key level, and we would mark that on a chart. He would mark that on a chart, and so I don't know if he's still using it. We don't talk too much. Don't talk anymore, but let's get back down to business. So 650. So first of all, man, this is going to be a long video. I'm going to try to pick it up, but before today, you can see, and sometimes I wish that I would do this before it happens because this is exactly what my expectation was, that what we've seen in the previous 2 days, Wednesday, Thursday, we're testing kind of the top side of these highs, and we have kind of this open space here where this imbalance move came down. Expectation was that if we could get above these highs, we were very likely to go and fill in this space here And that's exactly what we've done. You can see we're back up there right now. This last, earlier today we tested that. So let's not look at that too much. But that was the expectation. And the expectation also based on these market profiles, these volume profiles, is that we have this space to fill in here. And you can't see it now, but this 48.93, when this was the first time back to this point of control here, this untested point of control was at 48.89, and that was my first target for a long side if we get a long into that to fill in that space. And the first time back to this, it respected it exactly and then sold off again. And then again it came back and retest, because that's what the market does. It comes back to retest and to find value. That's the only mechanism of the market, is just an auction. So so when I came in this morning about 6:30, I suppose I was there. I'm looking at all of this trade. We had several tests. Overnight high was here at this point, way from 1 in the morning, came up, and it seems we're pretty much in this fairly tight consolidation. Call it a flag, or you know, people call these springs, all kinds of stuff. All this is just consolidation, and at some point one side loses. And the side that loses is generally the one where the large players step in and manipulate the ones. For example, right here, 4:15 in the morning, come up here, take out the liquidity above these highs, and bam, then we sell off again. Where does price come to? Right back to this, where this imbalance move came from. So this stuff isn't an accident. This stuff happens over and over and over. It doesn't always happen, but a lot of time these levels, especially when it's the first time back to them, they are respected. So then we get this. This is the overnight high. Then 6:30, we come up, test this. So these are the levels that I'm watching. So right here, this has already been tested. So I'm watching at this point. I'm watching these untested highs. This was a high tick failure here, where this came back, and so now I'm really watching closely what's going to happen when this bar high is tested, this bar high is tested. And unfortunately, the first try was at 650, I believe, 650, and 650. I'm watching these bar highs, and this is what happens when I see this come above here, test this. I jump on this a little too aggressively, feel like this is failing down, and unfortunately, on this bar, I get taken out of that trade for a -6. I managed it really tightly, because I knew if we got back above this price, we were likely to test the overnight high. And that's exactly what happened, as we can see here. So this overnight high is tested, and this is when I'm really paying attention, because the expectation is, I'm a guy on Futures.io, I don't know what his real name is, but he really helped me in starting to make binary decisions and keeping them mindful at all times in the market. If price does this, I want to be long here. If price does this, I want to be short here. So, and that's when I get my context here for you know, my 15-minute charts and stuff. But you can see these bar highs. So at this point, if we break above this area, I'm watching to fill in this space and take longs all the way above here. If we fail these highs, I'm looking to come back down and test the low sides of this consolidation and possibly move down into, you know, these untested highs here. This for sure to see a reaction. This is my first target here on any short trades, short setups, short to intermediate target. So but that's really, I glance at that every once in a while when I lose, because I want to maintain my focus and my context read. So again, so this, I take that. Now this is the point where you see, this is where you see this story play out, that I'm always trying to narrate to myself and tell a story about what's going on. And I apologize, I'm losing my place here, but I think it's right here. So 653, this is where I get taken out, and this is crucial as well, because we see something being absorbed here. Somebody absorbing or accumulating size, because above this, price does not break out of here. So all of these traders that are trying to play this breakout are now trapped. So we have a ton of trapped longs here, and so that's great for taking an aggressive position. 36 was my entry, entered at market, so it was realistic entry. Below this, for this to hold. So 36 up to here, I have a 9-tick stop, because if price gets back above this again, I don't want to be long anymore. I don't want to be short, I mean. I'm wrong in this trade. Price is likely to hold these highs and continue higher. So 36, aggressive short entry, and price quickly sells off. Where does it go to? My target is to this, where this consolidation area is, where this imbalance move came up, where this price came from, where this imbalance move up. This is a demand zone. Price is likely to test this at least and have a reaction there. It's a good place for a target for me. So my target was 92. Unfortunately, what happened is, as happens so often, I get shaken out of these sometimes. And trying to manage this as well, I'm thinking, well, I know I'm likely to have a reaction around the round number because that's what always happens. You always have a lot of activity around the 48 even. So, but I'm thinking, you can see this on the 1 minute more clearly. Why this was clearly a good place for a target. So the real conservative target would be the 48, and this is, you can see exactly. And so what happened, price came down, tested the 48, came back up, and this is where I was managing my stop. Now it wouldn't be surprising to see price come back all the way up to 21. I'm short from 36. I don't want to take that much of my equity, so I'm trying to watch the dome, see if there's any chunks of volume I can manage, and I put my stop at about 12. So unfortunately, put my stop at 12 and I got taken out when price only went to about 17, 16 before going where exactly to within 4 ticks of my target. So the low was at 87, 88. Not bad. So that was my first trade. First nice trade for 25. Managed a little bit, maybe more aggressively or a little more liberally. I could have taken that off again for a little more. So 741 is where you see this. So now I'm thinking, we've shown that sellers aren't real strong here at this point. And now we find out, we get this nice imbalance up, and now we're consolidating here. And so what I identify here is that my concept and my idea for this trade is that if we get some kind of failure below, that we are likely to go back up, and again, this untested high here. This is untested because price failed here, so this is still untested. Then to go up into here and fill in this large space of these previous previous auction from a long time ago, actually. And that's what I did. So 741 I got long. Let's go back to and see what that looks like on the footprint chart. 741, we come up. We're seeing that I'm watching this, watching to see what's going to happen. So we get this imbalance up, and then we get this consolidation. You can't see it really clear. I still like this point and figure and using a 3-minute footprint, because sometimes this point and figure is just, it's not that orderly and it's kind of messy. So like you can see here, it's just all over the place. The 3-minute is just a little more structured. So I see all of this happening, this large volume here, testing lower, not much a reaction. Sellers aren't able to get much control here. So this is let's see what do we got here. So this is okay, so this is what happens. Sorry, I'm trying to keep my head straight here. So what happens is I miss the long. I don't find a good setup for it. 741, yeah, I miss it. I missed the break of these highs, like I was talking about. That's what I was hoping to find, to get some kind of failure here, to get long, to break these highs and then push up. I didn't get it. So what happened is after the breakout up, we get this consolidation. And we get, see, this is the area that I'm watching on the M1. You can see it. This is where buyers step in again. So at that point, at 741, there's a large chunk, large volume here off of this after the imbalance move. This stuff right here. This large amount of volume. So my concept and my idea is that if we can hold this, I'm going to take an aggressive long with a stop, small below this area. And fortunately, it worked out very well. Entered about 741 in here when price was, I took a tiny bit of heat, but as you can see, 7 ticks of heat is all I took. And then price, this very small consolidation, and then pushed up into, didn't quite make it. I was hoping to make it up into that 90 something area. So another nice trade. I think I took it off for 20 ticks. It slipped me one, and eventually you can see it did consolidate here again and pushed back, up well above that area. So 755, I took an aggressive short, and I'm going to see if I can identify exactly where and what that looked like. And sometimes these are book map levels as well that I'm watching to see what's going on. But you can see it here. So what happens here? We have this high tick failure here where price came up and just not much going on. Price tried to come up, not real aggressive on this either. You can see sellers starting to come in to step in here. We get one last test up. They really try to get something going. You can see in it somewhat of a small imbalance here, and when the offer is lifted, and nothing happens. So right here again, I take an aggressive short here to come down. And where am I likely? Where am I likely to take this off at? I want to watch this to see down into here, to where these or right here, where to the lower side of this consolidation area, and that's a pretty decent. And I didn't. Fortunately, I was able to take off. It's 755, so I took on this after this high tick failure. I took off 10 when I took off 10 because we just kind of started chopping around in here, and since we hadn't had another large imbalance move up, it's likely that we will consolidate before and go higher again. So then for the final trade, I took it was at 820. And that was my expectation was to get up into this area, and you can see it here on. No, you can't see it. But that's all this kind of where price was. So that's way back 1221. This area here, this consolidation, this is where price was likely to go to. And a lot of balance in here as well. So if we break up into that, we're likely to come in here and test this. And that's what we did. So, and why did I take that? You can see here this very, very chunky amount of volume here coming in. We come back in, and Bookmap was a big thing for this because at 820, this bar right here, we can see price, they hit the book and flush the book. You can see because there's these zero prints here. So this is definitely a stop run, and then further accumulation here. Price goes here. At this point, I take a long at about 50 something. I don't remember exactly what my entry was. It was 59. I entered at 59, so slightly just a hair above this chunk of volume here. Very aggressive. But again, I'm wrong on this, or I get chopped up if we get down below this and hold this and then move further down. My expectation is for that not to happen because I've seen this so many times. You have the accumulation here. Where does all this come from? And then again. So the large players, in my opinion, are looking to fake out the breakout traders. The shorts, trap them here. We always have shorts trapped here as well. Buyers accumulating. Shorts getting trapped, or also longs getting stopped out. What happens? Straight away, in very short time, up into that 49.22. And my target wasn't that high. My area that I was watching was to come into this kind of this marked area. So I was happy to take this off ahead of the 49 round number. And what did I end up doing? I took it off at plus 40, so right ahead of that. And it worked out well. And again, what happened, price stalled there, very kind of in this area, stalled, consolidated a bit, and then pushed again higher. Another trade that I didn't get to take, and this was something thanks to Bookmap, was this. I saw price come down to this. I was short here. This 47.890 area. Bookmap 47.90. You can see it happen here. And this is why I like this, the granularity and the detail that you can see here. So you can see this this first time down back here. All this volume come in here. Push up, down here. Not much action. And then one more test down and nothing. And then after that point, we'll go to the moon and go all the way up back to the expectations of this, these untested highs here to break this, but didn't get on that trade. So well, happy Friday. This is definitely longer than I was hoping, but I'm feeling good. Happy to go into the weekend with this kind of day, and I've put together some pretty solid days. I feel pretty good about it. Other than yesterday having one down bad day, it seems like I've had mostly green days for quite a while. So let's keep it up, keep it going. Would love any criticism, critiques, or advice that anybody has. I still, even with this great day, thing on my mind is that if I could get a little more size after I confirm that these trades are going in my favor, I could really maximize profit on these things and also offset my losses a little bit. So thank you.